What is break even? We've got some real accounting 201 today, but a very, very important fundamental to understand in your business. And who better to talk us through it than my old university lecturer? Oh no, it's Phil. Hey, mate.
Mate, accounting 201, I'm about to get up and leave because I can't remember getting past 101, if I'm really honest.
I did 1, 2, and 3.
Did you?
Yeah.
I think I had to do 1, 1, 1, and then on to 2.
Oh, I see.
Yeah, because I failed, and then got 51%, and then they let me through.
Either in 2 or 3, I can't remember which, but I had the same lecturer from the year before.
Ooh, niggly.
And she laughed at me as I went to my exam.
Were you wearing that shirt?
No. As I went to my exam, she laughed at me. She walked across the pedestrian crossing. She laughed at me as to say, like, you won't be passing it. You're wasting your time, boy. And anyway, I'll never forget, we had a running gag. We're like, wait till she sees that you actually passed and you're in the 201 or the 301, whatever. Yeah. And I hid sort of behind a couple of the lads in front of me and then let her start the lecture. And then I just kind of made myself
visible.
Yeah. And like basically she stopped and was kind of like, what are you doing in here?
Do you, not that you would, do you remember their name?
Obviously, I'm not traumatised by it or holding a grudge or got a massive chip on my shoulder.
No,
or like,
not at all. You're not that type of person.
I'm packed with a counsellor to figure out why I'm so angry about it and I'd fucking run. Oh, sorry. Yeah, of course I remember her name.
Okay. Yeah, right. Interesting.
Yeah. Sorry, what were we talking about? Break even. Let's go. Hey,
yeah, so, hey, we've done a little bit of work recently. Well, not a little, we've done a lot. And break even has popped up on a number of occasions in the work that we've been doing. And reflecting on that, every time that it's come up, clients have found it really interesting and gone, let's drill into that, help me understand it more. And we thought, well, the data is suggesting that people are finding it interesting. So if these people do, the wider audience probably does. So let's talk about it. And we thought, well, what better thing to do than create a podcast and help people understand what is break-even point? Break-even point is the point in your business that you sell enough product or services at a particular dollar point, at a known margin, less your known fixed costs, and you don't make either a profit or a loss. The number on your profit and loss report is 0. You have broken even. Yeah. So it's the line in the sand that's going to determine whether you are profitable above the line or below the line running at a loss.
So I have an Abacus business.
Yes.
And I buy Abacuses.
Going well.
Yeah, yeah, it's really fashionable, really modern technology. So I buy these Abacus or Abaci we call them, for multiple Abacus. And we have that as a cost, right?
Not Abaci?
I'm not sure. It might be, yeah. Anyway, I'll have to look it up. I'm very good at my Abacus business. So I buy my Abaci and I have a number of those and they're a cost for me. And then I sell all of those at a pretty good margin. I think, I'm like winning and grinning here. But then I have insurance and then I have some storage costs and I actually have some Stripe fees. I have some accounting fees and whatnot. And I look at my profit and loss and I think, well, I sold $10,000 worth of Abaci.
Wow.
And I had $5,000 worth of cost to get them, which I thought, well, leaves me with a good margin.
50%?
Yes, yeah, 100%. Yeah, sorry, 50%, yeah. And so I then, but then I actually go through my expenses. I've got some stationery, my Stripe fees, my insurance, etc. And I also had quite a long lunch one time as well. So in the month of May, my net profit of my 0 was 0.
Wow.
So
you
I didn't make
all of your gross profit.
Yeah, I didn't even take any wages or anything actually.
Yeah. For business owners, so now I think hopefully that explains to people out there what break-even point is, the point at which you make no money whatsoever, no profit, no loss. In order to work out what yours is, because it changes from month to month. So I guess break-even point, so the figure in sales dollars that you need to make every single month or year or quarter or whatever time period is that you want to work it out for, that you will neither make a profit nor a loss. To be able to know what that break-even point is, you've got to get your fixed costs in your business. So everything that Luke was talking about before, the insurance, the Stripe fees, well, they'll vary based on size, but the insurance, bank fees, accountants fees, rent, rates. What else is there going to be that's recurring? Subscriptions. Yeah. You'll have a look at your P&L. You'll get a feel for it. You add those up. GST exclusive, bear in mind, because it's the P&L. And the next thing is we need to divide that total fixed costs by our gross profit margin or gross profit percent. And business owners are going, I don't know what mine is. Work it out. Sales minus cost of goods sold equals gross profit in dollar terms. Take your gross profit in dollar terms and divide it by sales. that will give you a decimal, convert that to a percentage. If you don't know how to do any of this, ask ChatGPT or watch a YouTube video. That's the percentage point. And you might want to do it for previous months and get some history, because gross profit in businesses can vary. It's very rare that a business is going to have 38, 38, 38, 38, 38 every single month. The variable costs do vary for a reason, and then you're not always selling the same sales mix. So individual products and services are going to have different gross profit margins to them. So you might get 38 and then 33, and then you might go to 41, and it might average out at 38. So let's work out what that average is. We get our bucket of fixed costs, monthly, 2 monthly, quarterly, annually, whatever it is, and divide it by that gross profit percent. Let's call it 38.
Yeah.
That will then go, one divided by the other is going to give you a number. That number is the sales that you need to make over that period of time that we were just talking about in order to go, we're not going to make any money. So essentially that is the point at which everything flushes out. Above that, we're winning.
And make some profit based on the margin.
Yeah, and I think it's a great benchmark to go, okay, if we're setting a sales budget or a target or forecast for the year ahead, we should at least have an eye to what is our break-even point in the first instance, because there's no point setting a sales target that's going to be below our break-even point. We're going to go broke, and we're going to go broke real fast. So let's set a target. And then I think it's really quite exciting in businesses that sell, well, it could be products or services, but it's certainly easier for product-based businesses to then be able to go, okay, if our break-even sales every month is $50,000 and we've got an average selling price of $100, how many products do we need to sell? One divided by the other, X amount of units. And you can look at that and go, oh, wow, I've never done that many units before. Well, then is that one matching up with the other, and is that target actually reasonable? And then you might have to go back to the drawing board and go, oh, okay. And then you can start and play with the levers. And this is where we go, okay, well, do we do bundle offers? Are we increasing price? How can we get more out of gross profit? Because if we can increase our gross profit from the example that we used before from 38 to say 40 or 41 or 45, that is going to reduce the amount of sales that we need to be making every month or 2 months or quarter in order to achieve break-even point.
Right, I'll give you an example,
Nice,
excuse me, to help people understand.
Because you've been busy on your Abacus.
Of course. Now we're going to look at a legal firm to take people out of their business and think about a legal firm. Now, to step this through, a lawyer, they will normally have people come, let's say they have no recurring work. So people come along and they go, I need some legal help because I'm going to buy a box of sticks, or I've had a fight with my shareholder or something. And so they engage the lawyer, and basically let's just say they always do their work within a month. But every month I've got to find some new work and have some more revenue coming in.
They've bought a property, they'll need a lawyer.
So what happens for them in January is they go, well, I'm a lawyer. We don't work in January. We're going to the batch, and I'm driving my Audi Q6, Q7, or whatever they're called there. So, unfortunately...
Sounds like a lawyer that would drive a Jaguar, mate.
A Jaguar, yeah. So I'm taking the Jag to the batch, but hopefully my partner, my fourth wife, brings the Audi Q6, 7, whatever. Both of them, actually. Someone's got to bring the jet ski up, Phil, with the double thing on the back, you know. Yep. Spare one for the dog. Anyway, they're going to have no income in January because they're at the beach. Aren't they? Pauanui, actually.
Pauanui?
Yeah, probably.
Yeah, that's where lawyers hang out. Yeah. Wearing their Burberry.
Of course. But in January, the landlord's like, oh, yeah, cool, dickhead, enjoy that. Pay me my rent.
Yep.
Oh, of course. Yeah, don't worry, you'll get yours. So the rent still has to go out. The insurance person's like, yeah, cool, mate, if you want your insurance.
Jason Parry still wants his New Zealand phone bill paid.
Yep. Cut that thing off and you won't be able to have calls with the mistress. So you need to pay.
That could be niggly.
Over January.
Yeah, you got to pay the burner phone account.
So you end up with, basically for a law firm, they end up with $50,000 worth of costs.
Oh,
You've got to have a nice office, Phil, overlooking the water.
Gas for the Jag is not cheap.
Exactly, and that's tax deductible too, especially when heading down to the batch. Right, and topping up the jet ski, but don't tell the accountant. Suckers. Sorry. So January, we've got zero income, nothing. No work came in because, like we say, we're at the batch. We've got $50,000 worth of expense. So we've effectively, on paper for accounting terms, we've lost $50,000. That's ugly, isn't it?
Massively ugly. Forgotten the wages.
Oh, of course. I meant to tell you that, of course, I've got a few lackeys that help me out. And they're not expected to work January either. That's right.
Are they down in Pauanui as well?
Oh, shit, no. No, they're at Foxton Beach, Phil.
Foxton
Yeah,
Beach?
they can hang with their family. They're not at my standard yet. So obviously I have the wages that are part of that $50,000 for the legal firm. Okay, this is some fun, isn't it? So obviously in the other 11 months of the year, they need to generate enough profit to be able to cover the month of January, where everybody has an amazing time at summer at the Batcham with their families at either Foxton or Pauanui. And God, I hope the staff don't pop into my bloody house over January.
Yeah, that's a really good point. That's because we all shut down and go to the beach at Pauanui, and we're hooning around on our jet skis trying to keep the various mistresses entertained. That we've got to make, we've got 12 months of costs, but only 11 months of capacity of revenue to generate.
Yeah. And we see
to be able to cover those costs.
We see this all the time with businesses, don't we? When I think a lot of them start thinking about this break-even thing, they're like, shit, like what do we need to do in sales to ensure we can cover these costs? And they know that December, January can be quite light. So then they start thinking about it in a bit more detail.
I think it's a really smart way of looking at it and using that quiet period when, frankly, no one in New Zealand does any work. And if you are, you're a mug.
An outlier.
I'm sorry. Yeah. Because we're all at the beach at Pauanui.
Yeah, get a job in the local Pauanui bar because I'm down there spending.
And I think a lot of people would go, oh, yep, I know what my break-even point is from on a monthly basis, but then go, yeah, that's great when it's a trading month, but then all of a sudden, shit, when there's a month that we don't have any ability to generate sales, our break-even points just got higher on those other months because we actually need to create a profit in those months to cover the loss that we're going to incur in January, 50 grand.
Yeah. So this lawyer, they get sick of this, and then the next year, basically what they do is they go, you know what, I'm going to actually get one of the lackeys to do a fair bit of work in January because there's divorces in January after the Christmas fights. So I've got one of them to come back from Foxton for the final 2 weeks of January. Hell, I'm not going to the office.
No, you don't start back till late February.
Oh, shit, if you're lucky. I have to see about that too. So I bring them back in January, and basically I know that if I get them to do $50,000 worth of billable work in January, then I'm going to break even.
Yeah.
And they're going to pay for the landlord to get theirs. Shrewd landlord, too, bastard. And I often push back on his price increases with my own legal expertise. But Jason Paris will get his, etc. Everyone will get paid, and the firm doesn't lose any money. It's fantastic.
Brilliant. And that's great that you've got the people to leverage off of to help get you through that tight period so that you can enjoy your time down at Pauanui, knowing that you've broken even.
Well,
and the champagne can keep flowing.
Well, Phil, I inherited this batch and I've worked bloody hard for it all my life. So, of course, I will enjoy it. Yeah. And no, you can't have a turn on my jet ski. Hey, shit, I hope no lawyers listeners, because lawyers are listeners, because they might be doing me for definition. This is obviously just a joke, and lawyers don't act like this. They're not like this at all, but I just thought it was a good way to illustrate a break-even point.
Which lawyers aren't like that?
Hey, shout out to the law profession. Okay, what do we need to turn to next, mate? Probably the cash side of it, maybe.
Yeah, and when we were talking about it off mic, that was a really good point that you raised in terms of going, oh, it's all well and good thinking about break even, but that's on our profit and loss statement to make sure that we're covering our costs. To have a business actually produce or do something typically requires assets, and those assets require finance. And that finance needs to be paid. And in January, when we're down at Pauanui, or when you're down at Pauanui, or the lawyer's down at Pauanui, because I'm sure as shit not there.
I'm not yet.
As well as that landlord wanting the rent to be paid, you've got Mr. Bluebank knocking on the door. Yo, lawyer man, this loan on that Jag and that bloody Q789 needs to be paid. And you're just like, well, hang on a minute, I've got 50 grand of costs to pay. You're telling me I've still got to pay my loan on my car that I'm using privately, but I'm paying FBT because I've got a squeaky clean tax record. And you're just like, oh, geez, so all of a sudden it's 50 grand plus my loan repayment of 5 grand, plus I like to take drawings out of the business so that I can pay for the costs that are non-tax deductible, like the gas and the jet ski, because, you know, we're a reputable law firm. So there's another $5,000. And we've got holiday pay and other bits and pieces to do. I'm just trying to think. Tax, that's the one.
Oh, don't remind me,
I knew there
Philip.
was tax. Prov tax, January. The IRD want their tax payment and profit that we're calculating pre-tax. We've got to work out the tax. And so where's the money coming from? Because we're not selling anything. So break-even point's gone $50,000 to cover the overheads, $5,000 for some loan repayments on the Jag, $5,000 for the drawings, plus a tax payment of no doubt at least $50,000, because these lawyers are making super profitable super profits as they do. So break-even's going to be what's that? $110,000.
So we got 50K, then we got 5K, did you say, for the loans, and then
$5,000 for drawings.
5K for drawings because I want to draw some cash out and throw it around, you know, in front of the people of Papua Nui.
I mean, I think $5,000 is
light.
is very, very light. I mean, that's really, you'd be lucky if you scrape by a week for a lawyer on $5,000. But let's just use that $5,000 and then another 50K for a tax payment. That's $110,000.
I guess it highlights that cost break-even on a profit and loss is very different to cash break-even.
Bingo. And I think that's the missing piece of the puzzle and why people potentially don't understand the relationship between the profit and loss statement and the balance sheet. And so many people don't look at the balance sheet because they don't get it.
No.
It's just, and that's fair enough. It's not their job to understand it because that's what accountants are for. But you need to have a degree of understanding, and that needs to come from the accountant or you taking some form of education to be able to go, okay, well, I make money. Where does that money go? Because it's sure as shit not my bank account. Or how to, and that's another lesson of going, right, let's understand the buckets on the balance sheet. And some of these are the ones that we're talking about in terms of tax payments, debt payments, and drawings. Well, in order to be able to support that balance sheet need, because that's a sponge, it's sucking cash.
Yep.
Well, we've got to put water into that sponge, which is profit. And we've just illustrated with this one with the fixed costs of $50,000 plus the sponge to fill that up. That's another $60,000, $110,000 now. If we then gross that up with our gross profit margin that we were talking about earlier, all of a sudden our sales have gone from being $50,000 to break even. We now need $110,000 to break even.
Yeah.
So even when we're shut down and doing nothing, we still need to be invoicing $110,000 just to break even.
Yeah. Just to end up with nothing left as such.
Yeah.
Yeah. Yeah, I think we often, as you touched on before, we'll get the question from people, well, it says you say I've made a profit, where's the cash? I think if you ask that question or if you think that, you're not alone. So like, it's a really good question. But often we're like, well, how much debt did you clear? Don't know. What do you mean? Well, even if you have a loan and you loan for a Nissan Navara, a VW 2RAG or something like that, tow rag, just what's your monthly loan repayment? Okay, it's $1,500. Okay, well, times that by 12, there's $18,000. Like, there's where $18,000 of your cash went. Like, I hadn't thought about that. So when you clear debt, it's not a tax-deductible expense. Now, a lot of people can sort of add in a second loan and a third one and a fourth one, and people are quite shocked when we do cash flow analysis for them and we go, oh, did you know that your monthly loan commitments are actually $8,000? And they're like, oh, shit, hadn't really thought about it like that. And we're like, oh, yeah, well, do you know what 812s are? Oh, wow, okay, all of a sudden, like, I didn't realise that we were trying to clear that much debt. It's like, yeah, and we have to clear that, as we always bang on about, with after-tax profit. So you've got to make the profit, put the tax aside, and then clear down your loans.
And that's such a fundamental thing that people go, oh, it's all well and good being profitable, and then we pay tax. And this is where people that will come to us and say, oh, cash flow's not good, da-da-da-da-da. And we've said before, it's the outcome. It's not what the cause of the cash flow is. The cause of the cash flow is you're not making enough after-tax profit to be able to support the lifestyle that you're trying to do. Yeah. You can't afford the Jag. You can't afford that level of drawings.
Oh, shit.
Yeah.
You sound like a true accountant, you do.
You got to trade it in and just, you got to be a little bit more humble. I mean, you got to be going Nissan Leaf.
Yeah. That's a great car. It's absolutely outstanding. You see lots of them, you know, very popular, high demand. Yeah, I think I was doing an exercise recently with a client, and basically they were sort of saying, oh, we would love to know how much we need to sell just to feel comfortable. And I'm like, help me understand what you mean by that. And so basically what they're trying to figure out, because what their terminology was, normally if we bill $100,000, let's say, to use an example, we know that we should be Okay. And I'm like, okay, well, what do you mean by that? And basically they just mean that they don't see the bank account decreasing too much.
Yeah.
So they're very simple. And then I say, okay, let's look at cash flow. So let's look at the loans you're repaying. Let's look at the expenses that are going out. So we map it all out just like we did at the start of this. And then we go, okay, well, there's your committed to costs every month. What I do is I say, let's do it like the lawyer and say you've got no income. The world stops. And so you're not going to have any costs because you're not going to like order any widgets to then sell. So your cost of goods sold are going to stop. You might have a little bit, but let's just say, bang, the world stops. And on the 1st of June, you go, right, well, we're not ordering anything. So you have no money going out, but you have no money coming in, but we still have to pay those overheads and the loans. Okay, we need 60 grand worth of cash. Okay, great. Well, do we have 60 grand worth of cash? No. Okay, well, do we want to build up 60 grand worth of cash and have it sitting there for if the world ends? But what's the likelihood that the world ends? And also, what else could we do here? If the world ended or was going to end, would you pay yourself? Probably not. We'd probably drop that off. Okay, well, there's 9 grand of cost gone. So now we're down to 51. Okay, do you reckon we could say to the landlord, like, shit, pretty wild time. Could you give us, a credit here or half? Like, maybe. So do we really need 60 grand worth of cash just for this crazy,
What if out of the gate?
But I said, that's you guys need to decide that. That could sit aside in a separate account and you go, that if everything stops in this business, you've got a whole month where you could last and pay all of your commitments and have 31 days to figure out what the hell are we going to do. If that's worth it to you for that peace of mind, stack the 60K aside, work towards it, maybe do 5 grand over 12 months, put it aside, bang, it sits in that account, don't touch it. And they're sort of on the path to do that. But that's a cash break even. But also on that, what we're able to do is then go, right, well, if the world doesn't end and it's not ending, what is our gross profit margin? Okay, it's around 50%. So for every $100 they sell, they have 50 left over. So for every 100 grand that they sell, then they've got 50 grand left over, but they've got 60 grand going out. I'm like, this ain't working.
10 grand short.
Yeah. Oh, okay, making a bit more sense. That's why we sort of think, if we do 100, we should be okay. I'm like, no, we're actually slowly going backwards.
And in that example, if my maths is right, if we're 10 grand short, we need to be selling another 20,000
bingo
worth of staff to make $10,000 of gross profit to cover the $10,000 shortfall.
Exactly.
Quick maths.
Smart. You're smart, mate.
There's the abacus at work, mate.
And where this becomes really powerful is that another business owner was looking at hiring somebody, buying back time and making the business more efficient. And I said, what are they going to cost roughly? And they think that they might cost them 100K. And I said, well, let's just buffer for 120 by the time there's other shit that they need. And, there's time off and whatnot. Let's just say, let's keep it a sweet, 10 grand per month. And so then once they then understood break even, I'm like, well, you're going to have another 10 grand going out. So what does that tell us? Oh, well, if our gross profit margin is 50%, it means that we need to sell another 20 grand worth of stuff and we've basically paid for their salary. I'm like, correct. I'm like, do you think there's 20 grand worth of work out there in each of those months? Like, piece of piss. I'm like, so why are we freaking out about hiring this person? Good point. Yeah, not sure. I'm like, let's roll. So it becomes very powerful when you start stacking these lessons together.
There's a lot of insights, once you start drilling into it and people look at it. The other one with that break even illustrates when going through doing due diligence on a business purchase is once you start understanding the breakdown of customer concentration.
Yeah.
And then where there's we're relying on the top 10, 15 clients that are going to generate, 80% of the revenue, that whole 80-20 rule that you often refer to. There's a small group of clients or people that interact with you that are providing you the lion's share of your income. And then you can start scenario planning and go, well, okay, if one of these customers, so we know what our current break-even point is based on the state of play here. If one of these customers was to drop off, what does that do to our business? And how do we replace that revenue? You can start going to some scenario planning. And for the clients that we've, or prospective business owners that we've worked with, it really starts and gets their wheels spinning and their minds turned to going, oh shit, okay, we don't want to be so reliant on these people. These are the industries and this is what they're doing. And for all the other lessons that we've put out there, these are the other things that we can go and do to de-risk that, to then go, if one of these scenarios was to happen, and it's unlikely that they would because there's established patterns, we're at least protecting ourselves because we're not becoming complacent and putting all of our eggs in one basket and relying on these people because we don't know what's happening in their world. Something could come along that could impact their business. That means they're going to stop interacting with us. But we're hungry enough to be able to go, right, okay, let's de-risk that by going and knocking on these other people's doors, building up some other sales. So we're creating a margin of safety should the worst case ever happen.
Yeah, it's a really powerful concept, and it's actually not that hard. And that's what I think, if you can understand the basics of it first and then just start with your own break even, and even, you don't need to figure it out to the entirety, but just get started and try and figure out, what do you have going out in an expense fundamental, and then what about cash on top of that? And what a client recently, I think when we did this exercise together, what they realized was like, oh shit, it's actually a lot less than we thought. And then they could stress a little bit less. Like they're putting all this pressure on themselves that they need to what are these sales we need to do?
Yeah.
And it's like, oh, that's actually not that much going out. Like they actually had quite a good cash buffer at the time too. I'm like, guys, you could sit still for a few months and you're going to drain all that cash, but like you're worrying about something that's not really realistic because you don't actually have that many outgoings. No. So, it's have a look at your fixed costs and then what sort of variable ones are going to go with that, subcontractors and things like that, and changes of pricing and whatnot. But everybody can figure this out.
It'd be one thing that's come to my mind. It'd be really interesting to see a business and its trend over, say, 5 years and go, how has your break-even point changed? Because I think as a business grows, there is that degree of complacency and taking our eye off the ball that we add in costs, fixed costs to our business as we grow. Our insurance goes up, and we've seen with business owners, insurance has doubled in such a short period of time. That puts pressure on break-even point. New subscribers like, oh, we've got to have the latest and greatest blooming SaaS software. We're subscribing to this, we're subscribing to that. And it's like, oh, all of a sudden now that we're achieving sales at this level, oh, we can go and treat ourselves, oh, we'll go and get the Koru membership, and oh, we'll go and get the car valeted, and we'll go off and do this. And it's all these costs that are coming onto the P&L that haven't previously been there, and that's going to impact your break-even point, increasing it, putting pressure on it. So I think there's a good reminder there that as you grow, that you can take your eye off the ball and become a little bit complacent with costs, that from time to time, you do need to review your overheads and go, do we need everything here? What can we strip out and actually remain mindful of the outgoings that they're under control. Otherwise, there's just leakage after leakage after leakage, and that will relieve the pressure from a break-even point of view.
Yeah, I've got a good example of this where we've got a business that we work with, and they're very good at maintaining their gross profit, and that's the thing that they focus on, and that's been great. However, they've just missed that a lot of their overheads have increased, as Phil said. So their insurance has doubled. They've done the staff can have access to a little bit more, so there's some more spending, and they can go wine and dine clients and things like that. And there's we're going into a new space because we're adding in more people. And all of these costs started adding up, and their net profit actually went backwards, and they were really frustrated because they're like, well, hang on, we're doing all this work, but at a good margin, and we've maintained it, but I've just sort of forgotten that all of this is happening down here, and we've not factored that into any pricing, and we haven't been able to increase the volume of the work to then recover it. So then they're pissed off at their financial year. So I said, but remember that you're investing into your business by getting these other people, training them up. There's a lag. The year's done now. We've got to focus on the next year. How are we going to get more out of these people so that we can then have more volume, more sales at good margin, and then it slowly starts to recover, the increase in the rent and whatnot. But I think a lot of people get caught out by sort of, we're making some good money now, let's just add in all these costs.
Spot on.
And we're still pricing everything the same. Oh shit, but you weren't selling enough to cover the increase in the rent.
Yeah. And that's where people take their eye off the ball, that they load in all those costs and then don't think, oh gee, the size and scale of our business has changed, and therefore the complexity and the sophistication of it has. So our pricing needs to match what is happening on our inputs so that we can still remain in business. So it's important to remember to make sure you're reviewing and updating your pricing. If you don't, you're not going to break even. You're going to go bust.
And I think that's where it's important for an advisor or even yourself to understand where you're going. So the same thing with a different business, but they've kept their pricing the same, gross margin the same, their sales are actually increasing, but they haven't really become more net profitable. And they're like, oh, well, this is shit, what's going on? And I'm like, oh, well, you've added in a heap of admin resource. okay, so that's sitting down here, and that's an overhead now, becomes an overhead in zero, and it's like, oh, well, I said, yeah, hang on. How much better is your life in this financial year than the year before? Oh, yeah, well, last financial year, I was out the door at 5 in the morning and home at 8 at night. At the moment, I'm doing 8 till 5. I'm like, perfect. So the numbers tell us, oh, mate, you're not as profitable. What's going on in there? The question is your life better? Yes, I've brought back hours of my life. I'm more present at home, etc. I'm like, so we've sacrificed a bit of profit. You would have been taxed at 39% and at this person. So I might, to get the 60% or 61%, I might, would you rather have the time of the family and those hours back, or would you rather have your number being a little bit higher? They're like, nah, take the hours any day. I'm like, good, perfect. So then they stop freaking out about the decrease in the net.
Is that an accountant?
No, no, this person cranks. Like the amazing thing about our lives, mate, is we get to, liaise and interact with so many different business owners who've got different goals and trying to achieve different things, and help them understand, their numbers. Because I think a lot of people hear, oh, my profit went down from the year before. Well, okay, what's behind that? Let's unpack that. And then sometimes there's actually good reason for it.
Good stuff. I think if you've tuned into this and you don't know what your break even is, maybe over the weekend or one night when you're sitting at home, dive into your accounting data, bring up that profit and loss report, understand those fixed costs, your gross profit margin, work out that break even point, and then add in that cash that's needed to feed your balance sheet. And you might get some lessons there and go, what do we need to change? Because there's a whole heap of levers in there that's going to ultimately result in more cash. And as business owners, that's what we want.